Good morning, my friends, and welcome to the Breakfast Club. It's Friday, the 5th of January. NFP, not for professionals, non-farm payroll day. No flying, people. Not a friendly place. Whatever you want to call it, it's NFP day. So, let's look at the markets. At the 9:30 open, we had a quick reaction across all markets. Or at 8:30 this morning, I should say. We've had a bit of a recovery, but we're just kind of keeping an eye on the 10 o'clock news PMI report. So, if you're in non-farm payroll day, be light. I just took a little trade. It was really tiny. I was looking at this breakdown here. Return to the breaker. Hit it. Stop loss was like really tight because I figured I didn't want it to break through that order block in any way. Came back up. As soon as it broke through it, I was out. I was hoping that this fair value gap would provide a level of support near the top after it reached for that order block breaker. But it didn't, so a little tiny loss on paper. No trading live today, unless things go really smooth. It starts to level out. Just check, make sure that we're live here. And we are. Now we have that inversion fair value gap above us. See if that provides any level of support. Take out London's high. There's a little fair value gap back in here in Asia. On the 5-minute chart, it's just right at the base of the daily fair value gap inversion there. We've come all the way down into that weekly fair value gap. Almost a full fill of that. No, the Dixie is dropping. It's not making E or GU react commensurate with this drop. Quickly look at GBP. A lot of equal lines on our lows sitting here in British pound. And even with that little run down, it did take out the lows. Oh no, it didn't. That low there on the daily is 26,113. 2601, 2601, 2612. So we still haven't had a break below the lows yet. So there's a lot of equal lows down here. Back to this original breaker. Haven't quite hit it yet. So do we get a rally on the American dollar, dropping this pound down below these levels? Retail's going to think this is a lot of support here. And they're not going to leave that unchecked. So unless they drive up here, I see this midpoint here, mean threshold on the daily. And this breaker right there. Let's see if those premium discount arrays come into play in the pound. Euro has already created that fair value gap in the daily. We've come back up, hit it, run down and run out those lows, and we've come near the edge of the next fair value gap daily here. I'm going to kind of quickly mark these out. In here we have a inversion fair value gap daily. That's all I can see on the daily there. We've returned to the New York Open. Midnight candle. Look at how sensitive that's been off of there. Wow, beautiful reaction off of that. CAD. It's an 8:30 drive up. That's 30 seconds. Let's put that on the 1 minute chart. Come back down into an area of support, perhaps. Unless this is the run below the lows. Non-farm payroll. Such a fun day. Okay. There's the run up into this fair value gap daily on the Canadian dollar. going to mark these out for future reference. That's the only thing I can see in there. An inversion in here. There's one on this side over here as well. Make that a little bit smaller. Equal lows. Fill the rest of that balanced price range there. Inversion. Okay, we just hit that here. The low on that candle is 682. High on this candle is 682. So we'll see how far we dig into that now. The early morning. We were up late last night watching a show, a British show called Fool Me Once. So if you haven't seen it yet, it's a good show. That Harlan Coben, I think his name is. Great writer. Lots of twists and turns. Right when you don't expect it. It's like, what? Where did that come from? And my wife's really good at looking for twists in a plot. She can find those little twists and turns in movies really quick. But Harlan Coben, ooh, he's good. Does some good little twisty turns. So you see we've got a reaction off of that, which is nice. Off those levels, equal lows. Lots of liquidity sitting down in here. So look for, this looks like a nice little continuation. So if we get below these lows, look for these lows down here. Another 20 pips or so. New Zealand dollar. Nothing's jumping out on me in New Zealand dollar. We dug into that fair value gap on the Australian dollar, into that fair value gap down here, this BISI. Came all the way back up inside that inversion fair value gap in the Japanese yen to the top. Little mohawk on the top there. We're still inside that range. Five days we've been inside that range. Fair value gap fill. Hard to tell, is there more upside for the American dollar here? Let's go to oil. We're way past that wick, so we are in an upward run. So I like this spot right here. Right there in oil. We've got support off this mean threshold here. Oh, we didn't validate it till here though. Okay, so we could still get another run down into here. That's my line in the sand for bearishness now. I want to see this whole price. If we do get a run up, I want to see this kind of whole price roll over and start reaching back down in here. I don't know if you're all into believing about pendants or pendant pattern. I don't know what that is. We did have an inside trade day in Dixie yesterday, was it? Yes. So usually you get a big run day, or a day or two afterwards. It's the explosion type day, and happened to line up with non-farm payroll. Inside trade day. Let me get over here. Gold. Didn't get the same kind of reaction out of, well, maybe he did. Stand by. Oh, not as big, I suppose. With silver. Gold took out its lows. Look for this fair value gap up here, equal highs. Your liquidity pool is sitting up here with this fair value gap here. Look back here, there's a gap in price. Coincides with this SIBI in gold. Gonna lose this threshold. Order block. Came back inside the threshold. This would be a little inversion here. So we can see a return to wheat and then continue down. Like on wheat, we return to order block, inversion fair value, continue up on the downside to lower objectives. Don't know if any of you guys are into commodities and stuff. Soybean oil is just a crazy coffee. Let's go coffee with an hour. Let's see what coffee's at. That's just like look. That's just being asked to be taken out. That is. Sure. S&P, NASDAQ, and Dow. Look for a return to that fair value gap inversion now. We'll see if this holds price on NASDAQ. S&P 500 has come down and filled the daily fair value gap. We're coming back to that New York Open, midnight candle. See if we get a reaction off of that. I'm going to slowly start digging down here the closer we start getting to 9:30. Minutes. So we've hit the open on NASDAQ, not quite on S&P or Dow Jones yet. See what you guys are saying here. News event 8:30 could be a stop point before moving lower. Seems contrary to the seasonality trends. doesn't it? It does. S&P is finally hitting its New York Open midnight candle. Taking out London. Returning to that. I want to see if there's a reaction off of this inversion fair value gap here on the daily. There's also a little fair value gap. We just filled it, just hit it there. Now, do we get a reaction off of that? And it's 9:30 in a 32 seconds. Two, one, and right off that reaction again, the same spot. Let's get down to 1 minute. This just returned to the Asian low. Looking at like potentially taking out the Asian high now. Oh, that's why I can't see it. Lots of liquidity sitting up here, fair value gap here on the S&P. We've so far had a reaction off of the New York Open. Just took out the London high. And down. We haven't had a reaction off of the NASDAQ yet. Perhaps running for these highs here. There we may see our reaction. We do have this recurring theme, don't you think? Return to Asia. Did it yesterday. So look for this high. Boom. Taking out the high. There's a little tiny fair value gap in here at 16,478. So can kind of keep your eyes on that one there. 16,472. 16,475. That's our high so far. 16,475. High on this candle is 16,475.75. The low on that candle is 78.50. Little tiny one right there. Finally making our push for these equal highs here in this fair value gap up here. We're through that fair value gap now. Order block. We're digging into that. Again, no trading on non-farm payroll. We're just kind of watching as it's reacting or how it's acting today. If you can get a beat on this, good for you. It's not about wrestling this for me. I just want to kind of get a... I'm looking at specific arrays, see how they react off of them. About the midpoint threshold of that last up close candle before that run below these lows here. Now as a breaker it should have a level of support. As soon as it hits that blue line there, that's the fill of the fair value gap, the run above the Asian high. We finally hit the New York open midnight candle in Dow. It sure does drag its heels. $30 little companies. It's doing its best here. Come on. So I want to see if this kind of holds price. If it doesn't, then you're looking at this candle here. The mean threshold of that candle's been held. I want to know if this one holds price. If it doesn't, then there's really nothing else there except for up here. These equal highs. Yep. So the potential now is to run for these highs here on the 5 minute. Let's go to the hourly and see what's going on here. Oops. Let me just get to the main chart. So daily we get ever return to balancing this down close candle here all the way back to the low of this candle. Inside this inversion fair value gap we have the mean threshold 16,514. That's this area right here. we do have, oh, we've already finished the regular trading hours gap. Two more news events. The ISM services PMI, Canadian IV PMI at 10. Oh, we've had a reaction off of that breaker. It's holding price. The bodies of the candles are respecting that. I want to get right through that regular trading hours gap, not just come back and tag it. If you want to get short on that, we want to see that come through here now. But if not, we get a reaction off the bottom half of the fair inversion, and then a run back inside again. And we have 20 more minutes before the next news event or news release. Could drive us all the way up into that mean threshold. Sorry, consequent encroachment of the inversion fair value gap there. We've come back to the top of the regular trading hours gap, clipped it, and then ran back into the fair value gap inversion. Let's look at some GBP. Creating relative equal highs here. Look at that little fair value out there on the 5-minute. Equal highs. Euro. Return back into breaker. Fair value gap fill. All of that's filled in there now. Except for that little 15-minute piece right there. I'm seeing a 1-hour bullish breaker and fair value gap. Any thoughts? Could this be the ticket to lower foreign currencies in the market today? Are you looking on the Dixie? Okay, let me look at the Dixie here. the 1 hour. We have a fill of that fair value gap here. This is all inside here. Breaker here. This one small little pop open or little piece down here before this last down close candle run. If that stays open from there, I agree, Derek, you might have a... That was the dip down, and now we have a run back up. For more upside, yeah. I agree. Could this be the ticket to lower foreign currencies? We'll see how this reacts in here. We've got a nice little reaction, a little pop off that fair value gap fill there. There's still a small piece there, but I'd like to see that stay open for continuation. If it doesn't, with this breaker is where we want to see the price key off of that. If it does come back into that, you want to see the top, leave it open. If it does come back for the full fill, you definitely don't want to lose the mean threshold of that candle. We have an inversion on this side over here. Yeah, let's see how that reacts off that level at 10 o'clock. The news event may change this and have it rip right back up again. Yeah. You've seen a 1 hour breaker there. Let me see that again. Yeah, looking for this guy here. Not that one, this guy. That's the little fair value gap there. This would be the breaker here. So I'd like to see that hold price there. want to see this kind of stay open here though. You got price imbalance there. Fair value gap there. It is coming back and getting that guy though. I'm just going to watch it for another few minutes, see what happens. $339. Lower time frames, there's that fair value gap down there as well. What's at 102.25? We got a small little imbalance down here. 102.39, 102.38. There's that hourly one right there. $102.25. What's sitting at 102.25? Order block. Would run these lows out here. So if we do lose that, look for 102.25. We should be right inside that thing now. Yep. It's not holding. That fair value gap's not holding. That one's not holding. That one's not holding. Do the wicks do the damage? Over to rejection block now. Now we're into that rejection block on the dollar. Eight more minutes left. Let's see what this does here for this rejection block. Permissible for me, but really, line in the sand was there. But this could just turn around right there at that point. Start running back up again. See where this candle closes in 7 minutes. We might see it actually close above this or inside this fair value gap. That would be the low. Not that I'm predicting the low. Let me get down to my minutes here. 53. There's the 38, 39. There's that fill on the 15-minute. And the 5-minute. What have we got in the 5-minute? Consolidation. price imbalance there. Right in that. 50%. I bet you if we take this thing here, just want to see here. Original consolidation, return to 50% of that, right on the money. Inside that little imbalance right there, right on the money. I've mentioned this a bunch of times. When you get back to the original consolidation, look at the top or 50% of it. Look for your PD array that may support that. That little sucker right there. How's that for precision? 50% right on the money. That would coincide with that 15-minute one we were just talking about. So we'll see if that one holds true. We'll see if that holds, that low holds true now. Interesting how we got a perfect reaction right off that 50% consolidation right there. From the 8:30 candle. I want to know if that's interesting. Do anyone else find that slightly interesting? Or is that just me? Am I form-fitting that? Do you think I'm just form-fitting it? Am I talking out my butt there? What am I doing? Good morning, Derek. And that's on a turn point too. All right, so what does that mean for us if that is the low? We have 4 more minutes to find out. And do we drive down, take out further lows? Keep your eye on 102.25 out of curiosity. If we do get one more drive down, what's 1 minute chart look like? Oh, it's 1 hour again. Back to these. See what we got here. Looks like Dow's reacting off of that New York session open midnight candle. Asia session's been run out, and we have had a fill of that fair value gap above the Asian session that we were talking about. And now on NASDAQ, here's the 10 o'clock. News event. What's this doing for Dixie? Hoo, yeah. Right through the 25. Welcome to non-farm payroll. Price imbalance, inversion, fair value gap. Draw across, inversion, fair value gap, held price on the opposite side. You would have had a nifty drawdown. And we're just playing hindsight here. We talked about this yesterday as a place to aim for an upside objective. In terms of an entry, no fair entry. We ran the London lows again, came back into them for a short on the 15-minute. If you look at that one, that was a 1-minute run. Order block, order block, order block, break down, come back up, order block, and then leave. So you did find support on the 5-minute for each one of the 5-minute order block candles. It did give us that before the run. Not that you'd actually would have taken that, but now we're going back into this daily imbalance in here. Let's see if this holds price, or we come back and fill this whole thing. Now I'd like to see it return back up into here. Find a level of support, or here. The 15-minute chart. And yeah, that would be one of 215, one of 216. Yeah, it'd be nice to see a legend like Larry Williams talk about the markets. A guy Michael used to follow quite a lot in his younger years. I wonder if Larry Williams has heard of Michael. He's certainly going to hear of him if he beats his record this year. So if we get a return back into here, continuation, and fill this. Look at the 15-minute chart here for a second. So this is going to put upward, give a lot of upward swing for foreign currencies. Pushing for that objective we talked about on GBP. We're about to hit that on the daily. That's our level. And euro dollar inside that inversion fair value gap right now. We'll see if these actually continue to provide support. You're just seeing a little reaction inside there now. So we'll see if that's actually a turning point. US CAD, we said that was it, its inversion right now. So we want to see this pop through here, come back and find some support at this to continue on the downside, filling the rest of this daily fair value gap here for a weaker American dollar. Canadian dollar stronger. Let me just look at that Forex market. I want to see if that Canadian dollar actually got forecast is 55. Previous. They haven't released the numbers yet. Stand by. Oh, they did. Oh, it was 56. So we were expecting that's positive for the currency, so we're still looking at more potential downside. Good. So the American one was not so good for the American ISM, the PMI report. Did not go well. That's down. And it was good for Canadian dollar, so that's further downside for Canadian. That's good. So this US CAD, we're looking for further downside fill on that. That's good. We broke through this inversion fair value gap now. If we come back and find any support at that level, you can finish off your fair value gap fill down here. Another 22 pips to go. Fair value gap, yes. That's our inversion right there. Good call, Derek. There's a little tiny imbalance on that side. There's one there. There's one here. There's one here. There's stuff all through here. But you could essentially just call that a gap. It's only a really thinly traded one-sided entry. There was no wick even on the other side. I see that on this chart prices dropped into the weekly discount. White line. Yeah. Prices moved into the huge volume imbalance from the earlier in the week. I'll keep my eyes on this chart and watch the consequent approach another daily wick. Tuesday central candle and the small volume imbalance orange for potential activity. All right, so further down on that, we've hit that price imbalance there. So I want to see if this holds price and we roll over and come back down again, or we're going to continue to push through for the rejection block above. Euro. Are we going to continue to push up for this fill? Order block here. Interesting how that inversion fair value gap here is giving us some resistance. The US CAD. We're still inside this daily one as well, the daily fair value gap underneath that light blue. The darker blue is the inversion. So you want to still stay inside here. I want to see this kind of hold price on the 1 minute. If not, look all the way up into here. These levels to provide some support. We'll see how they react off those two levels there on the 1 minute. And then we want this to come all the way back to, what was it, 120, 102.20 something. So that inversion there, I'm going to put that in there because that's a nice little point that Derek pointed out. The inversion. It's reacted off that quite nicely. Look at that, right to precision. Check US CAD. So if this Dixie is holding here inside this inversion, if we just come down and ran the bottom of it out, I'm looking for, if you're looking for further downside, or sorry, let me get this one straight here. If you're looking for this to continue to run back up again, that inversion fair value gap on the US dollar, CAD, is similar, right? If you look at the Dixie, doing the same thing here, inversion, CAD, inversion. We've just hit off the bottom of that inversion fair value gap there, and we're back into the middle of it, or near the top of it now. So when you're looking at, see how the bodies are reacting off of these levels? The key area of sensitivity is right off that inversion fair value gap right now for your CAD. So Dixie, not quite as choppy on the 1 minute. Oh, sorry, that's 5 minute. Let's get the 1 minute here. There you go. Compare that to that. CAD, US dollar. So The Dixie is just come back into this little fair value gap here. Now you want to see it get below this. I try to call this like minute by minute here. If you want this to come down into here, we want to get underneath this inversion fair value gap. If you want to start returning back up into here, we want to get on top of this fair value gap inversion and start finding some lift up. So seeing this is more of a bearish stance. My guess is we're going to continue down. But let's call this on a minute by minute basis. So when you're looking at this, we'll stay in CAD for a little bit here. Just because I got one guy asking about it. I got 7 people in here. Welcome everybody that are not speaking. We're going to watch this inversion fair value gap here now. I needs me a coffee. I haven't had any coffee this morning. Silver bullet entry. There's your 10 o'clock right there. Come back up, invert right into your silver bullet. 10 o'clock. If you're like me and I like to wait to the 12-minute candle, there's your 12. That would be my normal silver bullet. But because you're bearish, this might be the one here. We'll see if this fair value gap holds price. Looking at it from a minute by minute perspective. So looking at these old highs here, fair value gap, mean threshold. Sorry, consequent encroachment. Sometimes I get a word in my head, my ADHD. I get this word in my head and it just stays there and I got to keep chasing it out of there. I call everything an inversion, or I have to recorrect it again. Or recorrect. I have to correct it when I say it incorrectly. So anyway, here's our inversion here. So we're inside this guy, and we're inside the fair value gap BISI, which is consequent encroachment. We're through that. Still inside this guy inversion. Old high. Look for this PD array here. So areas of sensitivity. Right where the crosshairs are there now. That's the high. Another old high, fill. These are all logical places we could get a reaction off of. Looking for a fill. Take this here to here. %, lines you up perfectly on that there. So tell me these arrays are not with absolute precision. They're not randomness. Kirk Townsend, NQ please. No coffee? That's like trading without stuff. Oh, Derek, you cracked me up, buddy. Yes, you're right. It is like trading without stops. My mind is not as crisp and clean without caffeine. Do you remember that 7-Up commercial? Crisp and clean with no caffeine. Suddenly popped into my head. NASDAQ, here we go. Mr. Townsend. You're not Peter Townsend's kid, are you? Wouldn't that be cool? Fair value gap. Here we go. So we're still inside this daily fair value gap inversion here. See how the bodies, we've come through it, we rip through it, come back up inside it, and now we've closed on it, opened on it, and we're still inside it here now. So the potential is to run back up into here. You want to see it hold price there. If it does, and start coming back down again. If you're down, if you're looking for more downside, that weekly fair value gap that we're inside here. We had a gap in price over here. Now, hourly, what are we at? 5 minute here, right? So that's the top of the inversion fair value gap here. It's also taking out the AM or the PM session from yesterday. And we're into this inversion fair value gap over here on London. So equal highs here on the 1 minute. So Kirk, what are you looking for? Are you looking for a run higher, run lower? What's your speculation on that? We have equal highs here on the 1 minute. We still have the rest of that inversion fair value gap that we could come up into. We also have a little fair value gap above us here too. That is now an inversion. Let me just change the magic of templates. Oh, it's because I've locked it. Damn it. Makes more sense when you unlock it, Darren. So I don't know why I wasn't moving. So that's another inversion fair value gap above you. The right run. What am I looking for? The right run. Okay, that's logical. So you clearly don't have an objective. You're just looking for an entry, a confirmation entry. Let's see if we can't find you something. Tommy is 29, so we should have a swing happening shortly. In the next 7 minutes, we should have a swing occur. So you just look for a 3 candle swing point. And there's like, I kind of look at this like a little Judas run here in the next 6 minutes. So be careful of what happens over these next 5 to 6 minutes. You could see a little swing and then another swing in the next 6 to 7 minutes. And then turn and go back the other way. Kind of keep your eyes on these next, and we're in a consolidation, so it's kind of on the 1 minute, so it's kind of hard to give you a solid read on this, but keep your eyes on these next 5 candles. And I'm going to quickly see if I can run and grab a coffee. See what I mean? Get this little Judas kind of look. Swing up. We got another couple of minutes. Swing point. And there should be one more. The next couple of minutes or so. I'm still giggling over Derek's comment. No coffee, that's like trading without stops. Derek, you tickle my funny bone, my friend. I'd like to see this inversion fair value gap hold price. Then you want to see a breakdown, right? We want to see a breakdown below this low with a bold counter. We want to see an impulse leg down if we're looking for a change in direction. I haven't got my coffee yet, so nice reaction on the 1 minute USD CAD. Quickly go back there. Reaction off of that. Come back, find some support at it, and continue up. Lows, like we were calling. We get a reaction. I told you you can get a reaction off of those. Look at that. It's exactly what you got. A reaction off of those. Stayed open. And up we went. It's exactly what I was mentioning when you return to inversion. We have an inversion fair value gap. We have these little equal highs here like this. They are always potential places for it we get a reaction off of to continue to the upside. And we came all the way back down to this breaker here. This 2 candle, 2 minute breaker. Oh, sorry, it's not a breaker. 2 minute. Well, I suppose if you look at that little swing point there, but you generally want to see it break something more significant. You could even call it a mitigation block. Come back, mitigate off of here, and then go higher. Also, consolidation, return to consolidation, and then go up. So it's one of those 2 different points you can have for original consolidation, or the starting consolidation. When you break up, have an impulse leg above it, come back, trade to it, and then leave. That's the reaction you're looking for, which is what Ennis was looking at just a second ago. That inversion fair value gap is also a key level. So as soon as you break a body above it, there's your hint that we're still going to continue to the upside. I like bodies to break above, not wicks. If the wick only goes above, for me, it's not a solid break in that inversion fair value gap. So as you see, wick pulled all the way back in again. Finally get a body break out of it. Look for a return to the high. You can even dip down into the midpoint of it again, but ideally you'd like to see it just a return to the high and then leave for higher prices. Let's get back to this. swing point here. We may get one more little pop up onto that. I'd like to see that actually give a full fill. If it doesn't, no big deal. It's telling you if you're looking for a little swing point here at this time and looking for a swing point over the next 5 to 6 minutes. Here's your next swing point. Is it magic or is it time? And because we're in a consolidation, and it can be kind of choppy, the next 2 minutes could provide us another swing point. Those of you who were sitting in on my discussion about time a few days ago, you will have noted that I was talking about time specifically and how time can be more of a stronger predictor of how this algorithm is working than just looking at basic candles. And I'll slowly give you the levels and the times that I've done some research on. Over time, you'll get them piece by piece. Make notes on your on the sidelines. If you haven't subscribed, subscribe, pop in. If you like what we're doing, smash the like button, and stick around. There's so much more to see here. Swing point, next couple of minutes. So return to order block. If we're looking at this on a minute by minute basis, order block. It'll get challenging to call this because it's really kind of tight. We're between these two here. Order block, order block. Now it's got to decide which way am I going to go. You run out of PD arrays, you got lower one. You really have your mean threshold. We've hit that already, so you got to expand either up or down. And this candle should give us a potential swing point. It's got to open up its PD array now, start looking for higher or lower ones. So the data has to open up. We've run out of PD arrays right here on the 1 minute, so we've got to extend either higher or lower. So we're into the rejection block, 50% of that wick. So that 45 candle is a swing candle or potential swing candle, so it's 48 for 45 and 48. Reacting nicely for fill of this fair value gap here. Let's grab my coffee now. Okay, I have my coffee. I just realized the thing you cannot do is you can't make coffee with skim milk here. I've got skim milk left. And that's another NFP day. Not for purchase. NFP. Not for purchase. You do not purchase skim milk for coffee. I tell you, it's just not right. It's not right. It's a whole NFP day today. See, there's your 45. See your swing? Is there some magic to this, you say? Yes, yes, my friends. There are. And only 5 of you are listening to this. Good morning, my dear. I've just got it here. I made it with skim milk. Yeah, it's just skim milk. It's not a way to do. I know it's not a way to do coffee.
So we have to go off that day. I'm just going downstairs to do a little bit of work.
Okay.
Are you to shower?
Yeah, I'll shower. Yes, I'm live. They're all listening to you. You got to shower? Yeah, I'm going to shower. Got to work first. Got to work up a sweat. Anyway, here's the we have finally a break in structure with an impulse. Return to a low. We want to see that stay open now. Continue down. So Kurt, are you still here? Are you still with us, Mr. Cook? Mr. Townsend? Ah, it's not staying open. That's all right. Ideally, I'd like to see it break this low here. With a nice bold down candle. And then come into an order block below it. So we're back to this guy again here. Oh, you are still with us. $52, $55. So look for this high here for 55 perhaps. Then the next one's 58. 50, 52, 55, and 58. Gets a lot more choppier near the last 15 minutes of the hour. Mean threshold. We're between here and here now. There's the high. Mean threshold. So you have to extend either beyond this or come back into the mean threshold of that order block. ES. Let's look at ES. I want to see it take out the high. Yes, I agree. What is in here for you to consider? Go on the hourly here. Look at this wick. If you lose 50% of that wick, then look for upside. You want to close above 50% of that wick. $55. Sorry, 1 minute chart, he says. Correction, he says, the 1 minute chart. One minute. Yeah, 1 minute chart would be 50% of that wick would be there. In the next minute or so, you should see a turn. So off this order block here. And then the run up for 3 minutes. Five seconds. That high at 10:10, yeah, I agree. So when you see these order blocks, return to order blocks, don't just look at it as just, oh, it's just a return. Also start to study, you guys, the times at which they hit these key levels, this order block, and the time it actually hits there. You look down at these times here and see when they make their, not only are they making their return to a logical level of discount, if you're looking at that little range there, look at the times, note the times, start writing times down in your charts or on your notes, in your journal, and then kind of watch to see if this is a consistent thing and say, well, in the next 5 minutes, we should see a return to this specific level here around 3:30 and go, oh, well, at 6, we should see an odd kind of move. There's 6. We run above the highs, come back into, again, order block, 40. 45, 50, 55, 58, it should be 58, anywhere from, and you always have to kind of take these with a grain of salt. They're not super precise, but they're pretty damn close, within a minute or two. When you look at the PD arrays that go with them too, by the way. Harder in consolidations, they start to appear much more clear. There's your 40 again, over here, and it happens every hour. Every hour. Now look for the next couple of minutes. Mean threshold. I coded in TradingView that thing about time. Easier to track, yep. This is the candle that makes a swing. Double 0 and 2. Mark that on your charts. Double 0, 2. $58. Double 0 makes a run to nothing on that one there. I'll give you the earlier ones. You only have to research this stuff and you can see it's pretty obvious. Just repeat it. Go back through your charts like I did. I created a bot that would go back, multiple bots that would go back and search key levels through time, through years, on 1 minute charts, as far back as data would go, and haul out these key levels. And then you do that on a 1 hour and you'll start to see a similarity that occurs on the hourly, on the 15-minute, 5 minutes, all fractal. Like I've explained before, if you want to prove any theory out, it must be fractal. You must be able to prove it on all time frames. If you can't, to me, it's not a logical theory. If you form fit it to whatever you're doing, then it's not logical for me. There's 2. See your swing? Again, we're in a consolidation, so this may not be as dramatic for you. But it'll become more dramatic when the markets start to really heat up. You'll see the magic of this stuff. Gold, 1 minute. Let's have a little peekaboo at gold. A sell setup. If you can get a return to, we already got that return to that low there. If this runs up one more time and you get into this order block here. Yeah, that inversion fair value gap's holding price right now. Came back up, held it nicely, and the forward reaction, yeah, let's see it down in here. This imbalance here. Look for a run back up in here. Where are we at here? What's our time? 6. Next minute or so. Should see a potential swing point. So look for a run up into here. You can get a return to that order block here. You might have an entry for a short if you're not already there. Sherpa. Fed speaker at surprise, surprise, 1:30. You might can expect a little reaction in here, maybe. If you do keep your stop short, don't forget it's NFP still. I like that level there, inversion here, fair value gap. We've just popped into it for a short. That's your 7 swing. That could be a swing here too. 7's usually a swing candle. So if this is your swing, look for a return back up into here before going shorter. You want this order block to hold price, at least the midpoint of this candle here. At worst, the bottom of that inversion fair value gap. If you start to dig into it, your stop loss should either be above here or just above that inversion right there. But short for sure. Sherpa. Where can another entry be? Well, your entry can be in here. Or this new order block that's forming here. You might have to get down to 32nd or something like that. $30. We have a break. As soon as that breaks that low, it becomes a valid order block. And any entry back into it, if you're continuing to run down, is an entry. Like right there. So you got 10 to 12. Next 3 minutes, there's going to be another swing point. So look at this range here. Look at this. Oops, not equilibrium. There's 50% of that little range we just created from the 02 to the 07, 08. Wait for an optimum trade entry to get short. Stop loss would be above that. Same kind of thing we talked about earlier. You want this kind of to support price. But that 50% of the range is all you really need for a discount, premium run. I'd like to see a higher price if you're going to get, because you're in such a crappy day. Ask a higher standard for your trade. Like your stop loss would be like really tight. Take a small loss if need be. Here's a return back into old lows. 62% puts you right there in the middle of that fair value gap. You're in a premium now. If you're digging for a short, there's 70% optimum trade entry. And there's 11 and 12. Order block. I don't want to see that lose. So if you come all the way up into that right there, you don't want to see that get taken out. And it did. Inversion fair value gap on this side. You just ran these equal highs out now inside this fair value gap. That's the 12 candle. That's the potential turn point right there. So short there, stop loss above this high here, which is just above that. If you lose that with a body, then I'm wrong. Did ES show us a change of market structure, Darren? Yes. 7, 12. A change in market structure? I wouldn't say so. No. Unless you're looking at something I'm not looking at, Derek. Which time frame are you looking at? I don't see anything here on the 1 minute. Anyway, we're still in a consolidation type thing. We still haven't taken out these equal highs here yet. Unless we're looking at a breaking market structure down here, impulse leg, come back into it, order block. That would be the parent breaker of that whole run down below these lows, I suppose. We're slowly creeping up. I guess the thing here is on the hourly, whether or not that hourly closes above 50% of that wick that we talked about here on the hourly chart. He's new to the trading, but you love to do scalping. Well, it's definitely not the day to play around in the markets, my friend. But if scalping is your thing, that's what there's a few of us in here that like to do a lot of quick in and out scalps. So you found yourself the right spot. If you're a subscriber, welcome, welcome. Thank you, thank you. If not, subscribe. Pop in, and we're here every day. I like that little impulse push there. Return back into the fair value gap. Continue pushing up now. And away you go. Apparently not just took out that high. I had my stop into profits minor. So it got stopped out before it went lower. Then to go higher. I want to see this stay open, Derek. If this gets another fill, we're back into that choppy chop again. This is not a fun place to be, even in a 1 minute chart. Look how choppy this is. Yeah. It just took out that high. And we're looking at a 17 candle. This is that whole silver bullet type entry again. Is this the silver bullet for a high? At 10 or 11:10. Wait for that wick of the hour to form. And look for this. That's why I like the second one. That's why I like that time after 12 o'clock. Or after, especially if it's taken out a high, a recent high. Look at that. How long have you done the ICT for, Sherpa? Freba? Did you take his original mentorship? Have you taken his 2022? So that just took out the 10 o'clock high. Just exactly what Derek was calling for. And literally within, like, it took it out by 0.25. You're right, Derek, it did, but man, did it just like laser popped over it and then ran down. So now we're breaking structure to the downside if you're looking at it on a 1 minute chart. So we've just broke down through here. That's why you don't take that first. You got to be careful about your PD arrays or your silver bullets that you take. Like this would have been your silver bullet entry for long to get above that high, and you would have been out right there. So if that was your entry at 57 and you got out at 60, that was 3 handles. If you would have taken out that high. So silver bullet entry, wait for the 12 to 15 minute mark. 17:17. Sorry, I say 17:17. 17 minutes after the hour seems to be a nice silver bullet setup as well. There's your 17, 18, or no, there's 17 there. We're in the 30-second chart. No, 1 minute. You don't get anything there. You don't get anything there. And we have a structure break. Oh, so you came back in you were in there in 2016, so you were in the original 800 with me then. There was like 800 of us, 850 something of us when we first started back in 2016. And then yeah, then it got he got whittled out some people pretty quick. We were with him every day, sometimes twice a day. Hours, be chatting away there, be going on his tinfoil hat moments. Back in the good days, it was awesome. Has anybody seen? Have you heard his new 4-hour rant yet? Anybody seen that? Has he posted it? I've been checking the channel, and I haven't seen anything that he's posted. The last note I have is I'll edit it in the morning and I'll have it up when it's completed tomorrow. Well, that was yesterday. And it hasn't popped up yet. So if anybody's seen that, let me know. So any return into this or this here, ideally I'd like to see this just because it's a crap day. I'd like to see it return all the way up here, fair value gap, or your stop loss up here. But this could be a breakaway gap. And that's the usual thing you do. You'll see the 10 o'clock high be taken just before lunch or at lunch and then run back into the range. Or you'll see a 10, 11 will get taken out at lunch. And then the 1 o'clock will pull back into the range. I like these areas here. And it's 9:30. Everybody's waking up now. You don't think he has? Okay, good. I've extended past my time. It's only because my family's just waking up now. They had a late night watching that show. If you love that, if you like nice murder mystery shows, and the Brits do an amazing job at that, by the way. It's called Fool Me Once. Really good. Harlan Coben does an amazing job at writing mysteries series. So again, we have a rundown below the lows. If we get a body get down into there, look for these equal lows as potential places for that guy right there for a return to support further downside. Breakdown, low, return to low. It's been around 6 months since I took a mentorship with him. Oh, you've only been in it for 6 months. My mentor was a 2016 student. Okay, sorry, I misread that. So your mentor was in the same class I was. Is he still in it? I hope he's not one of those bitter, angry ones that left. I hope he kept up with it. A lot of guys weren't getting what they wanted from Michael back in the day. when he first started out. I remember going, I didn't know anything about it. I knew zero about Forex. And there were people that were pushing him to do more advanced stuff, and they knew this stuff already. We don't want to. And Michael was like, nope, I'm taking this step by step. If you don't like it, you can leave. And people kept pushing him to try and change. And I tried to get him to push faster, but he was stuck on him, begging him, I'm pleading, saying, please, please, please stick to your agenda. And he did. He stuck to his agenda, and he built it out piece by piece, which is exactly what those of us who are new to it, exactly what we needed to learn. And he literally held our hands all the way through it. And we spent thousands, and I kid you not, thousands of hours studying, staring at these stupid candles going up and down and up and down. That's why I'm asking you about the scalping techniques. Yeah, so this is your potential scalp. Look for that little range there. Time is super important when you're looking at scalping as well. Study swing points and study the times at which swing points occur. And see if you come up with the same times I do. Then look for PD arrays. Look for ranges. If you're doing quick scalps, look for ranges. Look for premium and discounts inside that range. Don't buy discounts when you want to go discount. Look for a premium inside that range. If you don't get it, wait for your next setup. You don't have to scalp every minute. So if that's the range, and you look for swing points that hold that. If you lose the swing point, then that's not your swing point. You're looking for at least 50% of that, which is back into this breaker here. Last down close candle before it ran above those highs. 50% brings you back to that guy. If this body holds, or this wick holds, 50% brings you here. 62% brings you back into this guy. So now we've lost the bottom. You look down here and say, what's my next potential swing point? In here, and is the time close to a swing point as well? And it is. Next couple of minutes. I don't do Swissy very often. I don't even have Swissy on my charts. Euro. There's the midpoint of the daily fair value gap. That's your consequent encroachment. Your 5-minute holding price, look for exits here. I like the fact that we've dropped below that. We're finding some support here. Look for a closure of your fair value gap. can still get a run back up into here. I think you're already through your 50% of this. There's your mean threshold of your BISI. I don't know how long you've had your trade on for about. But look for your logical levels to get out at either your 50%, your fill, old highs. That's your trade, man. So you decide where you want to get your trades out at. Lows, you could be a low trader, taking out your, every time you take out a low, you take out a portion of your trade. Reach for old highs. Fill of a fair value gap. Those are all places that you could potentially scale out at. Running old lows, more fair value gaps down in here, return to the regular trading hours gap, whatever works for you. I'm not going to tell you how to make your trade or sell to take your or work your trade. I don't give out advice on trading. But whatever if you've been doing this for a while, then whether it's options trading or whatever, you'll have your exits. Use your same exit strategy, whether it's running out old lows, or you can work it from the back end if you manage your trade from the back end. So if you enter in here, you break a low, whatever your stop loss was. I like to move mine to break even the moment I break a low. And then when you break another low, you can move it to the previous low, or you move it down to the next PD array that shouldn't be hit. There's different strategies. I can't give, you'll see mine. If you stick around, you'll see mine over time. But I'm not going to tell you how to trade your trade. So this is good consolidation. You want to see if you want to see a bit more of a consolidation, breakdown, come back into this. I like that imbalance there. If we can get through that, come back and find some support at that, and then continue down into this range. I'd like to see something like that. So watch that level right there. Get through it, come back, find some support at that level, a little tiny level right there for continuation. Or look for this return back up into a premium area of this range. That was the swing point I was telling you about. And then you got another swing point going on in here now. $30, $29, $30. There's always a swing somewhere between 27 and 32, and then again at 36, 37, somewhere around there, within a minute or two. Go back through your charts. Don't take my word for it. Go back through your charts and look for these. There's your 37. See that swing point? Every hour, specific swing points occur. Yes, thank you. Actually, I was checking my ability that there were the points that I plan to exit, going right or wrong, and it almost matched with your suggestion. Okay, good. So again, check your times for these swing points, and you'll start to see that time matters. It matters so much. 40, 42, 48, 50, 58, 55, 2, 7. And then there's a bounce around at 9, 10, 11, and 12. You can usually get bouncing around in there. Then a 17, 18. I'll give you more times tomorrow. I'm out of here now. It's 9:30. Look for that little support there. I want to see a body get below that. Find some support there and continue down. Other than that, thank you all for turning up, and I wish you all the best. Have a safe weekend, and I will see you. You can pop in on the Telegram account. I'll still be here over the weekend if you got anything you want to kind of chat about. I pop in and check my Telegram account out every day. And so the ThetaWaveTrader on Telegram, you're more than welcome to pop in. You'll see the link on the previous 2 days ago. You'll see that the link was in there. See you in the home base, my friends. And I will see you. I left trading on December and this week, and I've been having a psychological problem. I hope that's just a psychological problem with your trading. It's hard getting you back into the swing again. It's a little rusty. It's the beginning of the year. Take your time for about. It's not a race. It's an endurance run. You take your time. Pace yourself. We're all in this together. We're here to help each other out. We don't want to leave any man behind, or woman for that matter. So stick around. We're here to help out as best we can. If it's something that you like, pop in. If it's not, then it's not your trading. Then there's thousands of people out there sharing their views on how to trade the markets. I'm just one guy who's looking at it. I don't have it perfect by any stretch, and I'm not afraid of being wrong. So I'm okay with that too. So if you like what you see, stick around. If not, thanks for popping in. Hydra's a good guy too. If you like Hydra, he's another trader. He's got a lot of followings. And Tanya Trader, she's got a lot of following as well. So she might have a style that matches you. I'm all for about letting people find a style that works for them and a person that works with them and melds with them. Anyway, I'm not going to yak your ear off here. I will see you guys on Monday. Pop in on ThetaWaveTrader down in Telegram. See you on the weekend. If you've got some charts or things you want to talk about, Go for it. See, as soon as I start to leave, it starts to make it move now. That's good. Get down there. Get down and get back up into that. Run down here. Anyway, we'll see you guys on Monday. And when we'll live again. I'll be live again on Monday. Monday morning, bright and early, 7 o'clock Canadian time, which is like 9 o'clock American time, New York time. Other than that, have a safe weekend. Love you guys. Thank you all for popping in. I always appreciate people just popping in and sharing their thoughts with me and with everybody else. We're all here to help each other. Love each other out there in the world. It's a fun world. It's a fun place. Try and avoid all the negativity that's out there. Share your love with those around you. All the best to you guys. Bless you all. See you on Monday.